Yeah, a lot of traders confused mitigation blocks and breaker blocks. They enter too early, get stopped out, and then think ICT doesn't work. Today, I will show you how banks actually use these levels and how you can trade them with precision. Now, let's start with what? ICT breaker blocks. Now, what is ICT breaker block? ICT breaker block is a failed order block. Price breaks it, okay? Then later return to it as a support or probably a what? A resistance level. Now let's go to this. Now, as you can see, this is what? This is actually a bullish trend. Can you see? Price went up, retraced back, it went up again, it retraced back, it went up, retraced back, and it continues that way. As it's retracing, it is forming what? Other block. There's other blocks by this retracement. When it went up again, it came down to form an other block, it went up to form an under block, and likewise this too. By this retracement, it formed this what? Other block. So it now what? Continues upward. Now, this is what? Other block. This is a what? A bullish trend. Now, price is expected to come back to retrace back to this other block, then it will what? Continue in its what? In that direction. Now, in a situation where price comes into this other block, and this other block fails to push price upwards, okay, this is what? A breaker block, okay. When this other block fails to push price upward, maybe probably price went through it, okay, then this other block now, it is referred to as what? As a breaker block. Now, what is the function of another block? This is another block, okay. Now, other block is actually an institutional reference point, okay, where banks or institution where they place their what? Order. As you can see, this is a bullish trend, right? So institutions, they place their what? Buying order here, so that when price comes to this zone, then their order will be activated, and this order block will push price up, and price will start what? Moving up. It will start buying with high what? Pressure. So that is the function of order block. Order block is expected to push price up to take out this high, and this trend will continue in its what? In its initial what? Direction. So that is the function of order block. But in a situation whereby its price goes through it, then this other block, it is now what? It is now called what? A breaker block. So this is our expectation. When price comes to this region now, it goes up, okay, because of what? This other block, the effect of this other block. Look at the other ones. This is other block. When price came down to the other block pushed it away. Well, can you see? It came down again to this other block pushed it away. But on this level too, we are also expecting the same thing to happen, okay. But in a situation whereby it's now what? Instead of this other block to push price up to take out this high and to continue this what? Bullish trend, instead of that, price now went through what? Passed through what? This, or probably broke through this other block. Now this other block is now called, it is a failed other block. For the fact that it has failed, it is now called what? A breaker block. I believe you understand that. Now let's just continue. Can you see? This failed order block now is called what? A breaker block. Now, this is, let's go into the chart so that I can explain it to you better. Can you see? This is actually forming a higher high. This is a bullish trend on the what? On a weekly time frame. Can you see? It went up, it retraced back. Price went up to seek liquidity. It came back to seek fair value. It went up to seek liquidity and up. As it was going, it formed another block here. As price came down, it came down to this other block. So this other block pushed it up. Can you see? It came down again to this other block, this last black candle. So this other block pushed it up. So we're also expecting that when price is coming down to this other block, which is this last candle that it that got printed before price went up, to what? Push price up. Okay, that is our expectation. Now let's take a look at it. Can you see it has been spotted out, all the other blocks, right? Can you see them? They are all other blocks. I believe you understand other blocks. This is a what? This is a bullish trend. Can you see? A bullish trend. So can you see? Look at the lows of this what? Of this trend. This is the low, higher low, higher low, higher low. Now that is not what we want to what? Emphasize on. Now let's take a look at this now. This, can you see? This price has been trending upward. Now price is coming down. We are expecting this other block to do its work, to perform the magic that it has been performing by what? By pushing this price up, so such that this price will take out this high and the trend will continue in this same what? Direction. So let's project this other block to the future so that we can see the level. Now look at it. Can you see this is the other block here? So we've projected it to the future. So we're expecting that when price comes into this other block, so this other block is expected to what? To push price upward so that it can take out this high, then the price with what? Or probably the market will continue upward. Now instead, look at what happened. Instead, price broke through it and closed. Can you see? The bullish order block failed to reject and push price upward. Instead, price went through and closed below it. Can you see? Look at where price closed through. So this order block now is a failed order block because it failed to perform its work. Okay. Now, for the fact that it has failed, we no longer call it order block. So it is now what? A breaker block. It is now called what? A breaker block. Can you see? It is a breaker block. I believe you understand that. Can you see? It has been titled now a breaker block because price went through it. You understand? It failed to push price away. Okay. So now, how do you trade with a breaker block? Now, when something of this happened, just know that what? The direction of the market has changed. So if you have been bullish, if you have been buying this market for a long time, and this other block is taken out, then it is now time for you to change your what? Your direction. In ICT, we call it what? Change of character. That means what? You are changing from bullish to what? To bearish, or probably from bearish to bullish, or you can call it market structure shift. Okay, shift in market structure. Okay, this market structure has been bullish, but now there is now a shift because this other block that is expected to take out, to push price up to take out this high, has been what? Has been taken out. You get it? So price has penetrated through it and closed below it. So we change our direction. Now, how do we now get involved to start what? Selling. Now, they look at it. This region will now become a strong resistance zone. This region will now become a strong resistance zone. So we wait for price to retrace back to this region. Then this region will now what? Push price lower. So that is where we get involved. Okay. This price is expected to retrace back to this zone to then continue lower. So as price, you wait for price to retrace back to this zone. The moment price retraces back to this zone, then you what? You place your what? Sell entry, or probably you can what? You can place your sell limit and place all your parameters. Then you just leave the market. So market will do its things. It will tap you in. Then look at it. So we are expecting that price will retrace back to this breaker block zone. Then it will tap you in on your entry. Look at where your stop loss is. Then you target 1:2. Okay, when you target 1:2, so can you see price are retraced back into this zone, this breaker block zone. Okay, so now look at it. It has tapped you in. So it is now expected of price to what? To now move downwards. Now look at what price did. Can you see? Price went to your what? To your TP. So now let's take another example. Okay, can you see this is actually a bearish trend on 4-hour time frame? Can you see that? So now let's look at it. So let's look at it. Can you see price has been bearish all along? Okay, so this is what? A bearish order block. I see price retraced up and it came down. So that last white candle that is printed before price came down is called what? Bearish order block. Okay, so we are expecting that when price retrace back up, this bearish order block should what? Should push price down, just like in this case. Can you see? So we are projected it to the future. So when price comes to this region now, so we are expecting that it will push price away because orders have been placed there. Bearish orders have been placed there by institutions. So okay, I believe you understand that. So but in a situation whereby price came to that zone and what? And penetrated through it and closed above it. So this bearish order block is now called what? A failed order block. Okay, a failed order block. And once it failed, it has become what? A breaker block. Okay, it has become a breaker block. So what price will do next is to what? Is to retrace back to this zone to then continue what? Upward, which simply means that this bearish trend has what? Has changed. Okay, the character of this trend has what has changed to what to the buying part. So now let's take a look at it now. So look at, can you see price went through it, closed above it. Now it has retraced back into this zone. You understand? Now this is now a strong zone in the market. So this is now called what? A breaker block, because it another block that failed to push price lower is called what? A breaker block. So it is now time for you to what? To get involved. So because you have to change your what? Direction, probably your position. Okay. So by what? Trading what? Upward. So you place your entry somewhere around here, then your stop loss at the swing low, then you target your 1:2. So price will come back to tap you in and it will move in your direction, in your favorable direction. Look at it. Can you see? Price came in, tapped you in, and is going, and it's still what? It's still going. This is what? This is called what? Order block. I mean, breaker block. I believe you understand that. So now let's now go to what? Mitigation block. Now for ICT mitigation blocks, is actually most um, most the same as what ICT breaker block. So mitigation block ICT is basically a type of order block that fails towards continue market trend and ends up shifting the market structure. I'm actually going to explain that to you now. Okay, now let's take a look at this now. Look at it. Don't forget that this is an what? This is an order block. So when price comes to it, we expect that this order block will push price up to take out this high and for this trend to continue what? In its initial direction, right? Now let's look at this now. But in a situation whereby it comes in, okay, as price goes to that place and it pushed up, that simply means that what this order block is valid. But if it happens that price got to this order block, okay, and this order block has a strength to push price up, but it never took out this high. Can you see it? This order block is trying to push price upward, you understand, to take out this high, but along the line it couldn't push further, so it only stopped here. So as it stopped here, so eventually price now what? Broke down. Now the block that is formed here within this region is called what? Mitigation block. Now let's take a look at it. Can you see? Price, this other block pushed price up a little, but it could not what? It could not take out this high for this trend to continue. But instead, price what? Came down through this other block. It penetrated through this what? Other block. So this other block that has failed is called what? A mitigation block. I believe you understand that. Can you see? Can you see? This is now what? A mitigation block. A mitigation block has been what? Created within this region, because as this price was coming down and as the other block here pushed price up a little, you understand, a new other block was created. A new other block was created on this leg. Okay, so as this other block here was not able to push price up to take out this high, and this price now fell through this new order block that was created. This new order block is called what? Mitigation block. Okay, so now I will give you or probably explain to you the difference between breaker block and a mitigation block. Now let's take a look at this. This is what? A breaker block. I see price came to this other block. Instead of this other block to push price up, but price went through it. So it failed to push price up. This is what? A breaker block. I believe you understand that. Now, a mitigation block. Price came to this same other block. You understand? Instead of this other block to push price up to take out this high for this trend to continue, but this other block was only able to push price up a little, okay? It was only able to push price up a little, just a little. You understand? Before price eventually what? Fell down, fell. Okay, as you can see. Now, when this price was coming down to this other block, it created a new other block as it pushed price to up to this level. It created a new other block here. Now, this other block that is created here is now what? A breaker block. I believe you understand that. So for a breaker block, price went through it straight up, down. Okay, it failed. For a mitigation block, So the other block was able to push price up a little before it fell. So this is called what? A mitigation block. Okay, you understand? Now let's go into the charts. Can you see this is a bullish trend, right? So we are expecting that there's another block here. We're expecting that when price comes to this other block, it will push price away and take out this high, and this trend will continue. Now, can you see that is the what? Order block. Now this is our expectation. Price comes to it, push price up, then trend continues. But now look at what eventually came up. So price came to it pushed price up, but it couldn't push price higher. Price came down, okay, to form what? Mitigation block. Can you see? Price pushed up now, so it could not continue, and eventually price what? Fell. Let's look at how price eventually fell. Can you see? Price eventually fell through. So this block here is now what? A mitigation block. When price is not able to take out this high, you understand? This high here is not taken out. This high here is not taken out. This is what? A mitigation block. So what you have to do is that this zone now is actually a strong resistance zone. Okay, it's a strong rejection zone. So you place your what? You place your entry here, your stop loss at the swing, then you target 1:2. When you target 1:2, and what will happen? Price will eventually tap you in, and it will go down to what? To your TP. I believe you understand that. So let's take a look at the other example. This particular one. Let me look at. So let's take a look at bullish mitigation block. This is a bearish price action, right? So now we map out our what? Bearish order block. Can you see? So when price comes to it, it is expected of this bearish order block to push price lower. Okay, I believe you understand that. So this is our expectation. Price comes to it, then push price away to continue with this trend. So, but in a situation whereby price got to it, it pushed price lower a little, but it could not take out this low, okay, before price now went through it, okay. So it will eventually formed what? A mitigation block. I see price has penetrated through what? Through this other block. So now a new what? A new other block is now formed there. This new other block is now what? It's now called what? A mitigation block. So if we project it to the future, we wait for price to retrace back to it. Can you see? We after projecting it into the future, wait for price to trace back to it, then price will trade back to it. Then you place your what? Stop loss, take profit, your entry. You understand? So now let's take a look at. So this is our expectation. So price comes to it, then continue in this direction. It is fine. There are times that because of the pressure of price, you understand, the buying pressure is quite high, so price could not come in to tap you in. Okay, can you see? So there are times that you have to miss what? Some trade. But what I'm trying to emphasize to you now is that this is what? A mitigation block. When this low is lower than this one here, okay, it's a mitigation block. I believe you understand that. All right, that is how to what? That is how to trade. That is how to differentiate between a mitigation block and breaker blocks. You can go into your chart and see all of this for yourself. All right, thank you, Ageless.